What's going on, guys? Welcome back to my channel. In this video, I want to go over a number of stocks like Nvidia, Apple, Lululemon that I find very interesting, that are setting up quite well actually over the next couple of days to weeks, and kind of talk over the S&P 500 and kind of what I see for the markets going forward. So the S&P 500 had a pretty interesting, 3 days, Thursday, Friday, and Monday. We consolidated sideways, hasn't really gone anywhere. We reached 647 at the all-time highs, but I believe the market is just waiting for Jackson Hole meeting Wednesday through Friday. On Friday, Jerome Powell is speaking, so that's going to be a big one. And then we have FOMC minutes on Wednesday. And then next Tuesday, actually, we have Nvidia earnings. So, a lot of the news and catalyst, I believe, is going to be that'll affect the markets is going to be, situated in the back half of the week till to early next week. So I don't expect there to be any movement, Tuesday or maybe even Wednesday for the matter. But I do suspect that the market will break to the upside. And the reason why is because I find a lot of stocks, individual stocks that are setting up quite well in a bullish manner. So, for example, let's go over Apple. So Apple, we had a pretty big run from 203 to around 236, and it's been consolidating sideways ever since. But this consolidation isn't bearish at all. As a matter of fact, it's quite bullish. You can see it's quite setting up in a bull flag manner. MACD is trying to turn up here, and we kind of reset overbought indicators on the RSI, and I believe that this is setting up well to push well over 240 and even 250 in the near term future. You can see on the weekly time frame, Apple still has a strong weekly MACD. Momentum is extremely bullish. I would not be surprised to see Apple push up to 250 to 260 before we see any kind of near-term resistance, and that kind of bodes well with the market. If Apple is going to push up, I believe the market's going to push up as well. Uh, Next but not least, we have